Healthcare company Evolent Health has been on a tear this year, soaring more than 26% year to date. Essex Investments Management's Nancy Prial thinks the stock's growth plan could knock it out of the park. She joins us now for a fast pitch. Nancy, welcome to the show again. Tell us about Evolent. This is, to be honest, this is a company, the traders here, they said, we've never heard of this one. So what does it do and why do you like it?
Yes, so Evolent Healthcare is a player in the value-based healthcare space. Value-based healthcare is a way to get better outcomes while still getting cost control, really starting to gain traction not only with private payers like Molina, Centene, Humana, et cetera, but also with the government. And there's some talk that for Medicare bids, they're going to start to require value-based healthcare because it is a way to get these much better outcomes. What we like about Evolent is they are beating the numbers. They beat nicely in the fourth quarter. They raised guidance in the first quarter. Revenues are growing about 45%. They're just breaking into profitability. Return on equity is improving. So they are expecting to be at a $300 million run rate on EBITDA by the fourth quarter of 2024. That translates to about $1.65 in earnings. 2 times sales on the fiscal 24 sales gets you to $50 stock. We think it's a really strong buy here. Secular growth, cyclical tailwinds, good spending patterns.
Is this like a tech company that operates in the healthcare space? Is it a health? I mean, I'm just trying to understand how a Molina or a Centene uses this.
Yeah, so they provide the technology that underlays these value-based systems. So yeah, you can think of them as a software company, but they're playing in the healthcare space, and healthcare is an area we like particularly as we go into this slower economic scenario. To find a company that can continue to beat and raise is going to be increasingly scarce.
How did they fare during the last recession?
So this is a relatively new business, and they've been growing by acquisition. And they're a relatively new company. So we don't really know, but we do know that healthcare tends to do well in recessionary times. And what we've seen in value-based care is that it is a way, again, to manage costs. It's a way to smooth out the revenue stream for the physicians and the practices that use value-based care. So all indications are that it will do very well, even in a recessionary environment.
All right, Nancy, good to see you. Thank you.
Thank you.
Nancy Prial. All right, so let's go around the horn here and see what the traders think of this pitch. Evolent Health, EVH is the ticker. Tim Seymour, why don't you kick us off?
Do I hold on my board, too?
Oh, absolutely.
Yeah,
I know you're out of practice with the board. But
yeah, it's a buy. By the way, that also says let's go Rangers, in case anybody wanted to understand. That's cross hockey sticks. I thought it was a great pitch. I think it's a really interesting area. Value-based care is kind of like it's a leading edge in the healthcare business. About improving costs, but also improving outcomes. And I think the trend here has certainly got their back. They're one of the leading players, and I like the call.
Courtney.
I have a pass on this. I'm not going to be buying it.
It's not the neatest handwriting. Did you actually write that, or is that like a stencil?
Yeah, I would have a stencil over here. That would be nice.
That is pretty cool.
Yeah.
It's very nice handwriting.
I think my problem is they're getting into profitability, which you mentioned, but they're not yet profitable. It is more expensive than its peers. It is a very small company, so it's not something that I'd be jumping into right now.
All right, Rebecca?
So I'm saying within the small cap space, I'm not very happy. Because I think we're in that part of the cycle where small cap is going to be even more challenged than large cap companies to get the funding they need to grow. And small caps, generally speaking, are much more leveraged. However, if I'm thinking about where I'm allocating generally across equities, I like healthcare and I like adding on weakness into healthcare. So I would probably prefer a bigger cap healthcare name. But if I'm doing security selection within small cap, then this makes sense to look at.
All right. Dan?
I was just going to say what she said. And that, no.
Oh, your handwriting is good. What happened to you?
I just said sure. like, listen, that was a great pitch. But I'll just say this. I went and looked at the chart. This stock in September was trading at a 52-week all-time high, very near 40. And by November, it was trading very near 20. To a 52-week low. And so I don't have an expertise in small caps. I certainly don't in healthcare. So that's why I said that's what you said. I like what you had to say there.
You all get A+ for your Blackboard work. Yeah. Very good work, guys.
It's been a long time since we had the Blackboards. That's kind of an exciting day in its own way. Thank you.